Hey everyone, welcome back to Corporate Decoder, the place where we decode the hidden stories in company filings. And today we're looking at Volato Group Inc. And it seems like they're getting ready to sell some stock, but let's find out why and how. If you like getting straight to the point with corporate filings, make sure you subscribe. And hey, we have a fantastic community on Discord. Check out the link in the description below. You won't want to miss it. So what is this filing all about? It is a Form 8K, which is basically like a current report for public companies. It is used to announce major events that shareholders should know about right away. Think of it as breaking news from the company. This particular report tells us that Volato Group Inc., which we often see traded under the ticker symbols SAW and SAW, has entered into a pretty significant agreement. The main event here is an ATM sales agreement. Now, ATM in this context doesn't mean cash machines. It stands for at the market. This is a way for companies to sell their stock over time, directly to the public, through a financial agent. It is like having a continuous sale for their shares. So Volato Group is planning to sell up to $9.3 million worth of their Class A common stock. This stock, by the way, is the very same kind that trades on the nice American exchange under the symbol SAW. The agreement is with Virtue Americas LLC. They are acting as Volato's agent, meaning they'll be the ones handling the actual sales of the stock. It is a partnership to get these shares out into the market. This deal was officially struck on the 5th of December of 2025. The company has stated that any shares sold will be issued under an existing registration statement that was filed earlier in 2025. This essentially means they already got permission from the SEC to offer these shares, and they can now proceed with selling them as needed. Now, let's talk about the money. Volato is going to pay their agent, Virtue Americas LLC, a commission. This commission will be up to 3.0% of whatever price the shares are sold for. So, if they sell $1 million worth of stock, the agent could earn up to $30,000. They'll also cover some of the agent's expenses, which is pretty standard. The whole point of this at the market offering is to raise cash. The maximum they can raise from this specific agreement is $9.3 million. The agreement itself will basically end once they hit that target amount, or if either party decides to terminate it under certain conditions. The company also mentioned that they made standard promises and warranties in this agreement. This is normal in these types of deals, basically saying that they'll be truthful and follow the rules. They also agreed to protect the agent from certain risks, including legal issues related to the stock sales. The actual sales agreement is filed as an exhibit. We can't go through every single line item of the contract here, but the key takeaway is this is a formal agreement to sell stock. They've also included an opinion from their lawyers, Dykema Gossett plc. This is essentially a legal stamp of approval, saying that the shares Volato plans to issue are valid and legal to sell. This is often required for these kinds of stock offerings. Now, why would Volato Group decide to sell more of its stock through an at-the-market offering? Companies usually do this for a few common reasons. One, they might need to fund ongoing operations, especially if they are a growing company that invests heavily in its expansion. Two, they might want to pay down existing debt, which can improve their financial health. Or three, they could be preparing for a new project acquisition, or simply want to have more cash on hand for strategic opportunities that might pop up. Since this filing is primarily about the agreement to sell stock and not a detailed financial report like a quarterly or annual filing, we don't have deep dives into revenue or profit numbers here. However, we know from their other filings that Volato Group is in the aviation sector, specifically focusing on fractional aircraft ownership and jet charter services. This is a capital-intensive business, meaning it requires a lot of money to operate and grow. So, raising capital through stock sales is a common strategy for companies in this industry to fund their expansion plans, purchase new aircraft, or potentially weather any economic downturns. The fact that they're using an at-the-market offering suggests they want flexibility. This method allows them to sell shares gradually, perhaps as market conditions are favorable, or as they identify specific funding needs, rather than selling a large chunk all at once. It also signals that the company, or at least its advisors, believe their stock is currently trading at a reasonable or attractive price for investors. Looking at the context of their stock, it is listed on the Nice American. Companies often use ATM offerings when they want to raise funds without drastically impacting the stock price. As sales are spread out over time, the total amount they plan to raise, $9.3 million, is a significant sum for a smaller company, but not an enormous amount that would typically be a major dilutive event if managed carefully. A key risk with ATM offerings, however, is dilution. When a company sells more shares, the ownership percentage of existing shareholders decreases. The company needs to ensure that the capital raised is used effectively to generate returns that outweigh this dilution. If the capital is invested wisely, the long-term value of the company should increase, benefiting all shareholders, including those whose ownership percentage has decreased. Another thing to consider is the agent's commission. While 3.0% might seem small, on $9.3 million, that is almost $280,000. Plus, other expenses can add up. So, the net amount of cash the company actually receives will be a bit less than $9.3 million. This is a cost of accessing the public markets for funding. Ultimately, this filing is a strategic move by Volato Group. It shows they are actively managing their capital structure and seeking to fuel their growth or financial stability through the equity markets. Investing in companies that use these strategies requires understanding if their business plan justifies the need for capital and whether they have a track record of successfully deploying such funds to create shareholder value. So, what is my take on this? Volato Group is entering into an agreement to sell up to $9.3 million in stock. This is a standard way for growing companies to access capital. The main benefit is the flexibility to raise funds as needed. The potential downside is dilution for existing shareholders. The success of this move will depend entirely on how Volato Group uses this newly raised capital. If they can invest it wisely in their aviation services business, it could lead to further growth and profitability. If not, it could simply dilute existing shareholders without a commensurate increase in company value. We'll need to keep an eye on their future financial reports to see how effectively they deploy these funds. Alright, that is our breakdown of Volato Group's ATM agreement. What is your take on this filing and what it signals for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps us out, and subscribe for more deep dives into corporate filings. Don't forget to check out the Discord community link in the description for more great discussions. Thanks for watching. See you next time.